Okay, welcome back again for a second time. Uh, yeah, I don't know what happened, but we were live for about 15 seconds or so, and then the stream just suddenly dropped. A bit odd, a bit spooky, but okay, we're on it now. I believe everything looks like we are live and we are up. Sorry for that. I have no idea what happened. So, since we're a little bit behind now because of that, let's just jump right into the markets today. Uh, yeah, that was a bit odd. Okay, so the stocks, they traded a bit higher today with the Dow Jones rebounding about 0.5% after 3 consecutive sessions of losses, boosted by gains in Johnson & Johnson. At the same time, the S&P rose about 0.7% and the Nasdaq was up about 1%, extending last session gains as technology and communication shares traded higher. The small cap Russell 2000, well, it increased by 0.1%. Each of the FANG stocks plus Microsoft rose between 1 and 4% on no specific catalyst other than a buy the dip sentiment from investors. The broader market performed fairly well too, as 9 out of 11 S&P 500 sectors closed higher, and the Invesco S&P 500 equal weighted ETF, and that ticker symbol is RSP, it rose 0.5%. The mega caps carried the S&P 500 technology and communication sectors, like I just said, to the top of the leaderboard. The energy and utility sectors were the only sectors that ended the day in negative territory. On the corporate front, the healthcare giant J&J booked gains after announcing it's splitting into 2 publicly traded companies, much like GE announced that it's splitting into 3 publicly traded companies. What is the next company to say that they're going to split their corporation into multiple companies? I mean, things do happen in threes, right? Or is that just a superstitious thought there from me? I don't know. Maybe. Anyways, Tesla shares, they did drift lower after Elon Musk sold more than $700 million worth. So he's selling a little bit here and a little bit there to get to his final goal of 10%. That's what it looks like. On the corporate front too, the consumer sentiment in the US fell in early November to its lowest level in a decade. The preliminary November University of Michigan Index of Consumer Sentiment dropped to 66.8 from the final reading of 71.7 for October. It was the lowest reading for the index since November of 2012. The key takeaway from this report is the reporting that escalating inflation is negatively affecting consumer attitudes due to reduced living standards, and a growing belief that effective policies are not being developed to reduce the damage from surging inflation. The employment vacancies, well, it dropped to 10.438 million in September. Still, all three averages, they snapped a 5-week winning streak to end the session of this week in November as markets assess how surprisingly elevated price levels could impact Fed rate hike plans. Now, the best performing sectors for the entire week, number 1 was basic materials, that was up 1.8%. Retail was up 1.5%, and consumer non-cyclical, that was up 1.1%. Now, the 3 worst performing sectors for this entire week, energy was down 2.5%, consumer discretionary was down 2.17%, and services was down 1.8%. So yeah, some good news, some not so good news in the markets today. But there were a lot of things up. Sundial Growers just took off 27.8% right out of the gate. We had Blink Charging pop 12.6%. I do want to dig a little deeper on Blink Charging in their earnings that came out today. We also had Volta, which is another charging station. play. They were up 13.4% today. Array Technologies, which provides solar panels and stuff for the solar sector, equipment, they were up 20% today. High Tide was up 15%. Canopy Growers 12.9%. So a lot of cannabis stocks were up today. A lot of EV and blockchain different companies were also up pretty big today. Tilray was up 9% today. Unity Software, which I want to dig into a little bit today if we have time, they were up 7.9%, a big player in the Metaverse. But what's on your mind? And that's exactly what I want to talk about. Weird, no worries. Where do you think SoFi will settle? I'm looking to get back in. Yeah, it was totally weird. I have no idea how it happened. But when I went to log back in to do the live stream, YouTube wanted to verify my identity, which took a little extra time. So I don't know if it's been a while since I've physically logged into YouTube or what, but yeah. SoFi, let's pull SoFi up and take a look. I am invested in SoFi. I like the company. I think it's got a great growth story. SoFi, their ticker symbol is their name, SOFI. Okay, we're on a one-day chart here. We had a nice symmetrical triangle pop out of that. Then we had a head and shoulders pattern, which just basically was a consolidation pattern for SoFi. And then we've kind of been all over the place here with earnings. It was pretty much flat today, down 0.9%. It's up 0.18% in after hours. I really feel like this $21.50 support line here, I really think that could be its support for a while. And it's right here. And actually, the 21-day moving average is also right here. So in this area right here, that's $21.50. I think that could be a good support level for SoFi. Then again, it did have this pretty big run up right here the day after earnings where it was up 12%. And it did pull back down a little bit, but not too much, not too terribly much today. So going forward, I could see it coming down to this level. I'm not sure if it right now in its situation that it's in, if it's going to get too much lower than that. I could be wrong, but it's very strong right now. The stock has got a lot of strength, and I really believe that $21.50 would be a good area of support. Let's see. Love SoFi, but I bought low and sold after earnings, and with the bank charter coming, I'm waiting to get back in. Yeah, the bank charter. Oh my goodness, that will that gets me all tongue twisted and all hot and heavy because I know it's going to be a huge catalyst for SoFi when that does get announced. But yeah, 2150 I think would be the first support area if it can come back down to that. If it gets below that 2150 for some reason, if the market gets weak and it starts bringing these growth companies down further, if it broke below that, my next level would be right at $20. And then under $20, it doesn't have support until it would get to its 50-day moving average, which would probably be around the $18 range and some change. So those are kind of my like support levels there for SoFi. So 2150, I think it's got good support. For some reason, if it breaks below that $20 support, and then below that, it would be its 50-day moving average, which is slowly moving up right now, and it would probably be in the $18 and some change range. So that's SoFi. It's looking strong. It's looking healthy. I think it can continue carrying on for a while. Okay, so that's SoFi. Yeah, it is a good company. I love their products that they offer. They have such awesome verticals. From their past earnings, a lot of their customers that they were able to uh, not necessarily get, but keep and move them into different products. Like a SoFi Invest customer may have moved to SoFi credit cards, so they're using multiple services now, which is excellent, excellent for SoFi. Okay, let me hop over to Bitcoin. If you have other questions, just leave the ticker symbol and question it in the comments, and I will go over it during the show. All right, Bitcoin, BTC USD on TradingView, and I use Coinbase here for the data. Now, it has come back down and it has bottomed out right at its 21-day moving average and this trend line support. Let me try to highlight this a little bit better. So this area right here, this is where it's finding its support. And that price range is right now, it's creeping up a little bit each day because this is at a going diagonally. It is at about 62,500 right now. That's where support for Bitcoin is. This consolidation phase that it is with it's creeping down a little bit day by day. The candle wicks go down. They test this 21-day moving average and they bounce right back off of it. So a bunch of people consolidating, stacking up their coins, getting more coins. So that's what is going on with Bitcoin right now. If we look at Ethereum, and Bitcoin's at 64,100 right now. Ethereum ETHUSD on the chart. And Ethereum is doing the exact same thing. It is using that 21-day moving average as support, and it has been doing that since it broke out above it back here on October 1st. It's been using that 21-day moving average throughout this entire rally. Now, when it gets away from it, like you can see in this section right here, let me circle that. This section right here, when Ethereum ran up in the rally that it was in, it got to this trend line and it took a week for it to break above this trend line, but it was consolidating and it bounced off of its 21-day moving average. So that is a similar pattern to what is happening right now. So we could see a couple more days where it's moving sideways, but then again, a lot of crazy things happen to crypto during the weekend when people are off and paying more attention to it. So I could possibly see another move during the weekend here. Okay, so that's Bitcoin and Ethereum and SoFi. All right, moving off of them, let's look at Rivian because it IPO'd right this week and it's still moved up today. I think it's getting close to its potential. I'm going to go off of the 1-day chart and I'm going to go to a 1-hour chart to get a little better feel here. So yesterday I put these two blue lines on. One was at $120. That was the bottom one. And the top line is $125. That's where it was kind of finding its area of support in there. But today it has bounced on top of that, and it's kind of using that $125, $126 area as a place of support. Now, I think it is pretty rich where it's sitting at right now. It's got a market cap of $112 billion. So getting in right now, I think that would be getting in at the top. I do expect this one to pull back at some point and come back down, maybe to a level around $100, $115, or maybe it could sink down a little bit lower than that. If you look at the lowest that it has been is $95.20. So it's possible it could play around $100, maybe $95, and find support right there. for Rivian. Okay, so that's Rivian. It was up 5.6% today. It's down 0.5% in after hours. Also want to plug in while we're on the topic of electric vehicles, Lordstown Motors. I said yesterday in the stream that I thought it would pull back down, and it did today. So it had a major run yesterday off of some news that came out before the earnings, but then today it's down 17.5%. It's looks like it's up 1/3% in after hours right now. So yeah, it definitely fell back down to earth today. I suspected that big pump yesterday, and of course it fell today. Okay, a couple of questions here. What is the potential, okay, for VMEO? It's a YouTube competitor. Wow, it really dropped off. I haven't looked at them in a while. All right, let's go to the daily chart. 1 day here. You can definitely see that downtrend that it's in, but that gap down that it made right here with earnings. Let's see if I can line this up here. See if it makes some sense. It looks like on this way down here, it was using its 50-day moving average as resistance on its way down until, of course, that earnings report sent them a bit lower. All right, so I'm going to clone this line so I get an exact copy of the angle and then place it on a spot down here that makes sense where I can get the most points of contact, which is about there. So that was its downtrend that it was in. But of course, here on earnings, it posted a loss of 7 cents a share. They were expecting a 10-cent loss per share, so they beat by about 29%. Revenue of the 100 million, which was about spot on, so revenue was in line. Let's take a look over here. This was its first, was this its first? Second earnings report. All right, so it's beat its 2 earnings report, but it let's go into earnings here and look. Go to a quarterly view. All right, so on their income statement, profit margin has been bouncing around. 3 out of the 4 last quarters, its profit margin has been between maybe an average of about 20% loss. Only Q1 in 21, it had a 3.7% profit margin that was not a loss. Earnings are going down. So they lost 2 cents in Q2 21, and they lost 7 cents in Q3 21, and they're estimated to lose 8 cents in Q4 21. All right, let's see balance sheet here. Debt to assets seems to be right around 38%. All right, and then over here on cash flow, in Q1 there was a peak of financing of 200 million. All right, so it looks like they're not really steady with their finances there. And since we don't have a whole lot of history with the stock, I mean, this goes back to May of this year. It may have found a floor here. Its lowest point was on November the 8th, and that was $22.66. Right now, the technicals are saying that it's a sell, but it could be a buy the dip opportunity. The thing that I'd want to watch is I'd kind of want to give it a couple more days, because if you can obviously see the downtrend that it's been in, right? Then they have this big gap down. Now that they've gapped down, they're almost looking like they want to consolidate now that they're at this price point. So this may be a floor where the stock can consolidate some. And then once it has consolidated for a while, then it could start moving up again. But it would have to stay above this bottom trend line here, which is support. You don't want to see it break out of that. Right now, the relative strength index is sitting at a 25. So this is an oversold stock at this moment. And when it dropped down to these levels, if you look at volume, if we put a line right here just to track volume, it had really good volume when it got down into these, say below $24, below $25, and a high of $20. So between $20 and $25, it had a lot of momentum, a lot of volume kicking up. And we haven't seen that volume since it began trading on the open market. And of course, that was a lot of selling pressure when it came on the market. So this looks like it could be a good area of support, where maybe it's not going to make any big moves. It's just going to consolidate and move sideways. That would be my technical guess right there. That it's going to move sideways, consolidate some, and then find its way to go back to the top side of this channel. Maybe form a symmetrical triangle of some kind to finally break out of it. But that's what I see. That's where I see them at right now. And again, ticker symbol VMEO. So I think that's what's going to happen there. $20 looks like the base. If you could get it for $20, and that's right on this support line right here, I think that would be a good entry point. Just looking at the technical setup right now, the financials, they look a little on the weak side, but they don't look awful. And I think this is a area of support. All right, don't want to go in circles there with comments, but yeah, there's what I think about Vimeo. Or Vimeo. Okay, Rivian mocks me. I thought it was too pricey at 100. I feel like Jordan Gunn. No, don't feel like him. Not at all. I don't think you're going to be a Rivian bear for its entire life cycle. Okay, so yeah, there we go. So that was a few companies there. A surprising company got a downgrade today. Nvidia, ticker symbol NVDA. Let the chart load there. It's been on fire recently, and it has had a pullback, not a very big one. If you look at this thing, this is the daily chart. It has been rocking, and it's been a very good investment. It's over $300 a share right now after its pullback. It did get as high as $323, but Wedbush downgraded, and there's a crazy thing about this. Wedbush downgraded Nvidia to neutral from outperform, but they increased their price target from $220 up to $300. So I thought that was kind of interesting. Usually when you see a downgrade from an analyst, their price target sometimes, or most of the time, drops as well. So I found that interesting. But the reason they downgraded is they feel like the valuation is perfect where it is right now for Nvidia, and they don't see Nvidia being able to do anything different that could increase their valuation from where they stand now. Right now, their market cap is $759.7 billion is their market cap right now. And if we just take a quick look here, you can see on the right hand side of your screen, they have beat their earnings consistently for the past 4 here, rising each time, looking really good. Quarterly for them, they are looking good as well. Their profit margins are rising. It got as high as 36.4% for profit margin in Q2 21. So that even looks really good. Year to date, it's up 132%. So it is just rocking right now. But it did have a pullback from its all-time high right there, and it's kind of been bouncing around right now. I don't think it's got room to really move right now. I think it's going to start consolidating or slowly drifting down until it can get to a more natural area of support. If we put a trend line on here, and match it up with as many points of contact as we can, then you can see how far it is above this trend line right here. And if I clone it to put a resistance area, that would come in probably around right about here. So you can see this nice trading channel that it was in, but recently, November 2nd, it had just run up really far, really fast, and it's above this. Now, Nvidia does have earnings in 5 days. I will talk about them in more detail on the Catalyst Watch video that comes out Sunday evening. So watch out for that video. Okay, another company that I want to talk about a little bit more is Johnson & Johnson, ticker symbol JNJ. They are splitting up into a couple different companies. They were up 1.2% today. And if we look at this chart for J&J, they've really been kind of flat since their last rally right here during the beginning part of this year. And then it's just kind of been flat until we had this one little peak right here in August and then a sell-off. Let's see here. Another comment on here. Is there any inline progress of Amazon at least before Prime Day? In my view, it is sticking in a range and nothing triggering. Yep. Okay. I'll pull up Amazon in just one quick second. Let me just finish my thoughts here on Johnson & Johnson. Now, it is a notable Dow mover. It announced that it is intending to separate its consumer health business into its own publicly traded company, keeping Johnson & Johnson, the brand name, right out there. But its gain hasn't done much to boost the healthcare sector. It's up only about 0.2%, which is underperforming the broader market. So it's going to be interesting to see. Remember, GE is splitting into 3 different companies. Now Johnson & Johnson is splitting into 2 different companies. So what's the third, right? Everything happens in threes. So maybe this is the end of an era, with these behemoths of companies, and now they're gonna scale down so they can innovate quicker. Maybe, who knows? I don't know, but it's interesting to watch. Okay, let's pull up Amazon, ticker symbol AMZN, and let's look at this for technical. All right. So here we go. We know Amazon, they have their earnings report. It wasn't so pretty. And we kind of expected that, right? During the pandemic, Amazon just was incredible. I mean, everyone is staying at home. How do you get your stuff? You have to order it on Amazon. So it had a very nice run up. Then it started trading sideways for a while, and now it's range bound again, trading sideways. So I haven't updated these lines here on the chart in a while. So let me just put some fresh ones on here real quick. So when you're doing your technical analysis, right, and you're looking for lines of resistance or support, the chart's not going to be perfect, right? All right, so there's a area of resistance I just put on here, and that's sitting about $3,500 area of resistance. Now, the lines that you put on the chart, they're not going to be perfect, but what you want to look for is an area where your line is going to make the most or have the most amount of contact, right? So here's another area right here. This looks like an area of support at 3,300. That looks like the range that Amazon is trading in right now. 3,300 for support and 3,500 for resistance. And I don't think that there's any type of news that could potentially take Amazon out of this pattern right now. Let me just see what I can find here. I'm just kind of building this technical picture of how the stock is behaving. So really, there's not that. I mean, the biggest thing I see here for Amazon is that it is range bound right now. Let me clone this and bring it up here to the top of this. Yeah, this doesn't even, it doesn't even line up and match up. Okay, so I just think it's going to be locked in and range bound for a little while longer. You know, kind of like Apple. Apple is stuck in a range and it just can't break out. It'll have these days where, you know, it might seem like it's going to run and it's going to move good, but like right here, on November the 9th, Amazon had a pretty good day. It was up 2.5%. It broke above this resistance right here at $3,500, but it couldn't hold it. The next day, it fell down 2.6% to fall back into that range, and then it hasn't been able to break out of this 3,500 resistance for the past 2 days. So I think it's going to be stuck in here for a while. I don't think there's any type of news that could move it right now. Although investment thesis and ideas can change when you get new data points. So if there is some new piece of information, then our outlook can change. Just keep that in mind. But right now, it looks like it's stuck in, it's range bound, and it's going to be stuck in this moving sideways pattern. Just looking at some of the headlines here from today, Amazon worker group in New York, which withdraws petition to organize union, more labor information. Okay, so yeah, nothing there. Let me hop over here and take a quick peek here for anything about Amazon. Now, Amazon will get a nice little windfall from Rivian. So that could show up in its next quarterly report, because they had a pretty big stake in Rivian. But no, I do not see anything that suggests Amazon. Nothing. Nothing at all. So I think it's just going to keep moving sideways, couple percent up, couple percent down every day, until something big changes it. So that's what I think about Amazon at this moment. Now, you may be able to find some swing trading patterns on Amazon because of this range bound that it's in. If we go to, let's go to a 5-minute chart just to give a little example. Oh, I clicked 5-second. I don't want 5-second chart. Oh my goodness. 5-minute chart. There we go. All right. So when you look at the 5-minute chart, you can see these ups and downs and ups and downs, right? And you know it's range bound. So if you know that 3,500 is its resistance point, when the RSI, relative strength, becomes oversold. So let's use this example right here. On November 11th at 3:10 p.m. Eastern, it was oversold. It got down to a 28. This could have been an area right here of a place to buy for a swing or a day trade. You see, volume is low, and then volume is picking up as it hits this oversold position, and it starts creeping up. Volume starts creeping up. This could be a signal to buy. And then when RSI gets oversold, which puts it at about here, then you exit the position. And to measure that, if we got in, let's call it right here on this third candle, and we ran up to the top right there, I mean, it's a 1.7% move, not a big one, but that is a way that you could swing trade or day trade on Amazon, since you know it is range bound. And then now that it's at the top of the range, you just wait for it to come back down. Yeah, so there's Amazon. Okay, if you do have a question, like we've been doing so far, I love this. I love your comments and your questions. If you do have a stock you want me to look at, just type the ticker symbol in and we will go over it. Now, there are a couple of stocks that I did want to dive a little deeper into from their earnings report, just to kind of shed some light on what I found on them. But before we do, I just wanted to take a quick moment to say that I would greatly appreciate it if you did or would consider becoming a Patreon member. I would greatly appreciate it. As you know, it takes a lot of work and research in these different companies, which I absolutely love to do. And I don't want this to feel like a pressure campaign or anything of that nature. I'm just putting it out there so you do know. I love sharing what I find. And I also enjoy answering your questions. So if you find my perspective helpful, informative, actionable, then click the first link in the description to become a Patreon member to help support my research, analysis, and technical breakdowns. I'm also looking into find the best way to send out buy-sell signals and trade setups for Patreon members too. I am going to do that in the near future. I'm just looking for the best way, the quickest, the fastest way to send that information out. An example I gave yesterday is we could have a trade setup where an alert goes out the evening before saying, here's the stock, here's the setup. And then the next day when we execute it, the signals go out. So something that I'm thinking about just trying to figure out the best way to do it. So I would greatly appreciate it. It would mean the world to me. Okay, thank you guys for listening to that for just a moment. Now let's dig a little deeper on a few companies. First up is BLNK Charging. Their ticker symbol is BLNK. And a couple of the chargers, like I mentioned at the beginning of the stream, did really well today. BLNK Charging was up 12.6% today. Now, if you look, there's a red on their earnings, right? So EPS was, or earnings per share, was reported at a loss of 36 cents, which missed. It was estimated to be a loss of 28 cents. They came in much better on revenue. They just weren't as profitable at making this revenue. That's what this means when you see a red and a green like this for earnings report. So they reported $6.4 million. The estimate was $4.7 million. Now, BLNK Charging is blinking green today as the electric vehicle EV charging equipment company reported a surprisingly strong Q3 report last night and made positive comments. And this is really why the stock took off, is because of the positive comments on the recently passed infrastructure bill that I believe is waiting for the president to sign. This is also rubbing off on ChargePoint. ChargePoint was also up today. Let me just plug them in right quick. Ticker symbol CHPT for ChargePoint. And they did pretty well today. They were up 4.4%. Let me get out of this 5-minute chart and go to the 1-day chart. There we go. A lot of activity here with ChargePoint. All right, so there's ChargePoint. They did pretty good today. But back to BLNK. Now, BLNK reported a slightly larger than expected loss, but I don't think that matters too much because BLNK Charging is not going to be profitable for years still. It's not why investors are intrigued with the company. The more important metric was revenue. And let me pull BLNK Charging back up here again. So we're looking at its stock chart while we're talking about it, because it's the one that really moved. And it had the same setup right here that ChargePoint had, but its breakout wasn't as powerful. It took a couple of days for it to kick in. But yeah, so back to ChargePoint. The revenue was important, which surged more than 600% year over year to the $6.4 million, which was good and a good bit better than expected. The company generates revenue from both product sales and services. Deployment data is an important metric, and the company did well on that front with 3,016 charging stations contracted or sold in Q3, up 351% year over year. I think that's something you're going to see continue with many of these different charging station companies, from BLNK Charging to ChargePoint to Volta. Many of them, they're going to do good for several years as the infrastructure is continued to be built out for electric vehicles. But what's different about BLNK Charging is that it deploys an owner-operator business model, slightly different from ChargePoint and Volta, meaning it not only installs and maintains the charging equipment, but it also benefits from its ongoing utilization, which will generate recurring revenue down the line. Recurring revenue is what you love to see from companies. Any company that can create recurring revenue, that's a money printer. That is really, really good. Now, BLNK Charging noted some important wins in Q3, including a $12.5 million grant from Florida to deploy 52 DC fast chargers at 25 locations along Florida's major interstate highway. That's a big win for BLNK Charging. BLNK Charging also penetrated, or partnered, I should say, with San Antonio to deploy 202 BLNK-owned level 2 charging stations and 3 DC fast chargers throughout the city. So it has gotten into Texas there in that city. That is also good. It also expanded BLNK's Mobility Blue LA car sharing program in Los Angeles to deploy and operate 300 additional charging stations, bringing the total to 500 stations across 100 locations. In terms of the $1.2 trillion infrastructure bill being signed on, I think it is Monday, it will include $7.5 billion for EV charging build out and infrastructure. President Biden has said he wants half of all vehicles sold in the U.S. by 2030 to be zero emission. To support that, his goal is to have 500,000 EV charging stations in place that same year. So that's not that far off for 500,000 chargers. Charging stations as sort of like, I picture them as like gasoline stations of today, but slightly different. They don't sell gasoline, right? Where you have many pumps or chargers at these locations. So those 500,000 charging stations actually translates into 2 to 3 million individual chargers. BLNK believes this legislation is a game changer for the industry, and I 100% agree, and will significantly accelerate the development and expansion of EV charging networks in the US. Bottom line on this, the momentum BLNK showed in the first half of 21 continued into Q3. And the company sounds bullish, I would say, about the near-term outlook and the pipeline. And it was a huge relief to finally get the infrastructure bill through Congress after years of wrestling it around. In some ways, that delay may have been fortunate because this administration has been much more supportive of EVs in general, not getting political. That's the last thing I want to do. Than maybe prior administrations. But it could also be a sign of the times. These charging companies, BLNK, ChargePoint, Volta, Tesla's charging network, right? Maybe they're more ready for prime time right now than they have been in the past. That's a possibility to think about. So I think ChargePoint, I think BLNK Charging, and Volta and Tesla, I think they're going to do really, really good in the short term and the long term, as 500,000 charging stations within about 9 years it is now would have to be built. And that is substantial, and a substantial improvement to the US network as these electric charging companies like BLNK Charging build out in the next coming years. So what do you think? Who's your favorite charging station? Could it be BLNK Charging, ChargePoint, Volta? Maybe it's just Tesla. Maybe you think Tesla will dominate the infrastructure for EVs. And I think they're going to be a big player. But I think there's room for many different companies to be successful in their own right. Let me know in the comments. What do you think? Who's your favorite charging company? All right, leave it there. Let's see. Where will BLNK be Monday open? Well, it's hard to say. And the reason I say that is because it ran up 12.6% today. Whenever a company runs up that fast, it is hard for it to stay up there. There needs to be a pullback. So I don't know that it can hold this $40 mark on Monday. ChargePoint, yeah. I did a video on ChargePoint a little while ago. It's worth watching if you haven't in a while. I think maybe I'll do one here coming up on Blink, maybe Volta, maybe do like a couple of chargers, just to kind of update my own investment thesis to see how it's going. So yeah, that's the chargers. All right, the other company that I wanted to get into right now is Warby Parker. You know, the eyeglasses, right? A lot of people wear glasses, and it's a pretty interesting market. And what Warby Parker is doing is a little bit on the unique side. Now, their ticker symbol is WRBY, Warby Parker, and they haven't been public very long. They were up 9% today, a nice big run, but they dropped 6.3% yesterday. So they're just kind of making up some of that ground they lost. Now, they did have earnings come out, and this was their first earnings report. They reported 3 cents per share, which beat by quite a bit. It was estimated to be a loss of 52 cents. So they totally knocked that one out of the park. They reported $137.3 million, where estimates were at $133 million. So kind of in line there. They beat it by about $4 million or 3.2%. But they really beat it on profit. That's where they really shined. And that's one of the reasons why it was up 9% today. Now, Warby Parker is seeing its stock move up quite clearly after crushing Q3 EPS. Those estimates were nowhere near where the company actually ended up reporting. Now, this was, like I said, the first earnings report as a public company for Warby Parker. I can't believe I said that. Anyways, it was a solid first earnings report after IPOing. And this can be a critical point for a company, especially if it has started to lose some steam after its IPO. Now, Warby Parker, why am I saying Parky? I can't get over it. It IPO'd, it sold off, and then it had a nice rally. It kind of sold off again. It started to form a 21-day moving average, and it kind of hung out around that. And then it sold off right before earnings, and then they had the incredible beat on earnings on the profit side, and it pulled the stock up. Now, the online eyewear retailer, that's what they do. They started dipping below its opening price of $54.05, ending the session yesterday at around $53 a share. Therefore, by posting a quarterly profit of that 3 cents that I mentioned earlier in Q2, when analysts were expecting a much wider net loss, they were able to find a clear path, an upward momentum for the stock. Aside from huge earnings beat, they also topped analyst revenue expectations, growing about 32% year over year to $137 million. Another way to state this is that they were a purely online retailer. It has opened over 140 physical stores since 2013. That was a change from its original business plan, with many openings in just the last few years. In Q3, the company opened 9 additional stores and is on track for 35 new stores by the end of this year. So they're expecting to build way more stores this next quarter than they did this past quarter. Overall, they are off to a great start, an excellent start, as a matter of fact. In their first earnings report since going public since September of this year, in addition to the great results, They were also able to provide long-term guidance of at least 20% net revenue growth. Even though the eyewear company may not be a particularly exciting growth company, I think that they have carved out a niche with designer eyewear that isn't very expensive. Its storefront also is unique and could easily attract lens wearers looking for more stylish frames than what you would typically find at an eye doctor's office or maybe even Walmart, right? However, the stock is trading at a fairly high multiple of about 8 times projected 2022 sales and 310 times projected 2022 earnings. As such, I would also urge a little caution on the stock at its current level. If it has a pullback like it did yesterday before earnings, then that would be a nice place to maybe start a small position in a company that isn't overly popular amongst other investors, kind of hidden in the brush there, but it's one that I think is worth looking at. Okay, I see a ticker symbol. I will look at that. That's Volta, right? They're charging company, VLTA. I like them. And as a matter of fact, you're the one that turned this company on to me. I hadn't really noticed them before. And then when I did my research for the charge point video, I looked into them. Now that advertising model that they have, I think it could work for them. Now you can see it's very choppy because this is a company that doesn't get a whole bunch of love, right? It's not like ChargePoint or Blink Charging. It's not one of the more popular charging stations, but it is a company that's doing the right things. And that's why you see the daily candles, they jump up, they gap down. They're just like all over the place, right? There's nothing really consistent with it. It can fall just as quickly as it ran up. And I think that has to do with a lot of trading going on with the more popular chargers like ChargePoint and Blink Charging. But this is a company too that I think is on the right path. It was up 13.4% today. It's a company that you could swing trade. Let's see, sadly I sold around $10, once again thinking of getting back in. Thinking about getting back in, it's going to come back down. It won't stay at elevated levels like this, I don't think. If it could drop below that 200-day moving average, or at the very least come back down and meet it and bounce off of it, I think would be a good place to buy. Right now, that's right about $10.40. That's where its 200-day moving average is. And this company, it did a reverse merger with a SPAC, and so it hasn't been public very long. It had its first earnings report, which was a bit of a miss on EPS and revenue. So it's got some work to do. It's definitely got some work to do. It's more of a speculative play compared to some of the other chargers, but it's one to keep on your radar and watch. But I would expect it to come back down. Maybe that 200-day moving average, see what happens, how it reacts when it gets to that. That's what I would be looking for. Okay, a company, I'll be waiting for the $10 to come back. No yeah. There's no hurry, not at all. No hurry to get in. Okay, there is a company that I have been wanting to talk about all week. And your questions and comments have been so good that I haven't gotten to this company yet, and that's PayPal. I want to look at PayPal. They had their earnings earlier this week, and I've dug into them. PayPal is a company that I do hold in my portfolio, and I do think the company is interesting. And the company has gotten a lot more interesting over the past couple of weeks. And when you see the stock chart, you'll know why. But the ticker symbol is PYPL for PayPal. And wait till you see the stock chart. What a downtrend, huh? This thing has been selling off, which isn't too bad, right? It gives us our buying opportunities. Let me clean this chart up a little bit here. But its pricing that it's at, it was up 3.1% today, 0.5% in the after hours. But to get to the pricing of where it is right now, you have to go back to December of last year to get to this $200 or so per share price. But this pullback from its high, let me measure this. It got its high right here of about $310. And where it sits right now, that's about a third of its value. It's down 32%. 32%. That is nice. When you want to look for companies to buy, you want to look for companies who have strong foundations but have gotten beaten up. This company, PayPal, has gotten beaten up, down 32% right there. So when I was digging around in their earnings report, and I can't tighten up this too much, or the actual candles here get down into the volumes. Right now, it is so oversold. It's a 21.42. And remember, what 30 and under, right? So 30, 29, 28, 27, etc. That's oversold. And it's at a 21.42 right now. So the stock is really oversold. If we look back in history, if we're looking for oversold of this magnitude, we almost have to go back to March of 2020 to find it oversold this much. And before that, we have to go back to August of 2019 to find the company oversold like this. So it doesn't happen that much where it gets oversold down to 21.42, right? All right. So PayPal, it's a digital payments processing giant, and the ticker symbol PYPL. It missed revenue estimates and provided downside quarterly guidance in back-to-back quarters, which you wouldn't think is good, right? It produced a lot of fear that it would, or that its recent trouble might run deeper than what they're forecasted to be, right? Maybe they'll fall faster than expected. Maybe the headwinds will come on stronger and sooner than expected. Maybe they'll come faster than expected because they are taking eBay away from PayPal to make it its own, right? It's standalone business. So unwinding of eBay, which is ticker symbol is their name, EBAY, while it was unrealistic to expect PayPal to maintain the exceptional level of performance achieved during the height of the pandemic, the magnitude of the drop-off is catching investors off guard. In particular, an unexpected shift back to brick-and-mortar shopping due to a loss of confidence in shipping and a more profound effect from the conclusion of stimulus checks is weakening the online shopping trend that accelerated last year. The news isn't all bad. as PayPal also announced a blockbuster agreement with Amazon, ticker symbol AMZN, that enables US customers to pay with PayPal's Venmo at checkout. However, this development is being overshadowed, by rising growth concerns as the company wrestles against macroeconomic and competitive headwinds. The main takeaway is that PayPal has transitioned into a slower growth period after enjoying a boom during the pandemic-fueled digital shopping frenzy. Business is still relatively healthy, though, and the new Venmo agreement with Amazon looks like a game changer. Today's weakness that we're seeing, this big gap down that we see on the chart here for PayPal, simply reflects an adjustment from the lingering sky high growth expectations that emanated during the pandemic to a more cautious view that considers the intensifying macro related pressures. So I think this is a buy the dip opportunity for PayPal. Let me know what you think. Do you think offloading eBay was a mistake? Do you think that PayPal and its Venmo service with Amazon is going to work out better than they expect? I mean, Amazon, it's going to have integrations with all kinds of companies. Think about Affirm's integration with Amazon, and how Affirm is going into Amazon Pay. It's going to be a part of Amazon Pay, their digital wallet. Maybe Venmo finds a spot in there. I don't know, but we'll have to see. I still personally like PayPal, and I think it is on a discount. I mean, it went from $310 down to $208 or $209 where it sits right now. I think it can get back to those levels, but it may take a couple of quarters to get back there. All right, that's my thoughts on PayPal. Let me know what you think about PayPal. All right, another company I wanted to talk about that had earnings earlier this week is Fiverr. It's a freelance type of company. Ticker symbol is FVRR. If you want to have a video edited, you can find somebody on Fiverr to do it. If you want somebody to take pictures of using merchandise that you're selling, you can hire somebody from Fiverr to do it. Almost any type of service you can find on Fiverr. Now, they were up 5.6% today. They were up 11% yesterday, I believe it was, or maybe the day before that. It's been a couple days now since they had their earnings report. That's how long I've been wanting to talk about Fiverr. Now, in my eyes, after earnings, Fiverr got a high five from investors after the company posted a 20-cent beat in Q3 when analysts had expected a net loss for the quarter. Fiverr also signaled through its upside Q4 revenue, the guidance that they put out, that it predicts that fiscal year 21 will close on a strong note. The online marketplace for buying and selling of freelance services was in dire need of a boost, as its stock was down over 50% from all-time highs back in February, heading into the earnings report this week. Aside from the massive earnings beat, what may also be surprising to investors is the comparison between Fiverr's quarterly report and that of its peer Upwork, ticker symbol UPWK, which got crushed during when it released earnings that weren't so hot, right? and that was last month when those earnings came out. Now, Fiverr expected the summer season, in which freelancers generally take time off to go vacations and such, to extend even longer due to pandemic fatigue felt across the globe. However, that seasonality eased over the past 2 months. Also, Upwork pointed to a tight labor market as a tailwind going forward as the need for talent grows stronger. Bottom line, Fiverr got a much needed boost after crushing the estimate on Q3 earnings. The company is also expecting to keep its momentum going into the fourth quarter, and its comments on the hyper seasonality cooling off recently is great news for continued customer growth on both sides. I think Fiverr's results show that freelance work is on a rise. I mean, just think about all the people who were laid off, stuck at home, couldn't get back to work, whatever the reason may be. They turned to companies like Fiverr, like Upwork, probably more Fiverr based off of earnings, to try to make some money. As companies also continued facing material challenges with acquiring the right talent, Fiverr is well positioned to keep the wind at its back going forward. I think we could see Fiverr rise from now until its next quarterly report. That's how positive I feel about the company. I don't know if it can get back to those all-time highs that we saw back in February, but it could have a nice rally. Right now, it's hanging around this resistance level right here at about $200 a share. If it can break above that psychologically, that would be a bullish move and development on the stock. The next target would be its 200-day moving average, which is just slightly above at about $210. That would be the next area of concern. Then finally, the last resistance that it really has to making new all-time highs would be at $225. After that, there's nothing to slow it down but itself. All right, so that's what I think about Fiverr. I think it's got good potential. You may see it bounce around a little bit because it's right here at this resistance line of $200. And for some reason, when companies get to these clean numbers, $100 a share, $200 a share, $150 a share, it's like a psychological barrier that investors have a hard time breaking through. And then when they see companies break through that, then they're like, oh, wow, it can happen. Let me go buy some shares. So it's a weird psychological thing that happens in the market around these even numbers like that. So just keep an eye out for that for Fiverr. If it does break that, it'll probably run to its 200-day and then break that, run a little higher. Okay, one last company that I wanted to talk about. It's doing really well. It has a untapped potential with the metaverse. You know how Apple's iOS and Google's Android, they kind of run the world for mobile devices? Well, Unity software could be like that for the metaverse. It could literally be what the metaverse is built on. Their ticker symbol is simple. It's just the letter U, and that's Unity software. They were up 7.9% today. We looked at this company a few days ago during our live stream, and it's in this beautiful ascending trading channel here. And then it finally broke out at earnings, and it posted a penny beat on the bottom line and its third straight quarter of over 40% revenue growth for Q3. The software development and 3D modeling company also acquired or agreed to acquire, I think it's either Weta or Weta. It's WETA. I'm not sure how to pronounce that one, but WETA Digital. But Unity Software agreed to buy their tools and talent for $1.6 billion in cash and equity, which means stock in the company. Although the acquisition is only expected to generate about $70 million in revenue for fiscal year 2022, mostly through a licensing deal with the WETA VFX, a former division of that company, with no material revenue or operating impact in the rest of this year, fiscal year 2021. I think the purchase is an excellent fit. Overall, Unity posted a solid quarter and expects to cap off a great year with about 30% year-over-year revenue growth in Q4. Although the acquisition may seem pricey at 23 times expected sales, by using the deal to give developers across multiple industries access to the tools created by the company to produce 3D models, Unity is in an excellent position to benefit greatly from the acquisition over the long term. Just think about Android. Think about what Google offers Android developers in terms of tools to use to build on their platform. That's the same model that Unity Software is using. And I didn't mention, well, I did at the very beginning, but talking about Unity, I didn't mention the Metaverse until now, but I did mention it at the beginning. So I was trying to talk about Unity Software without talking or bringing up the Metaverse, but I just couldn't help myself. The company is going to be a big player in the Metaverse. And if you want to follow some of the companies that I think are doing well in the Metaverse, I will get a copy of this right here. This is, it's on TradingView. I've got the link right here. Here's what I'll do. Let me just share this to Twitter right quick. But this is my link to Metaverse stocks. That way you can track the stocks that are in the Metaverse too. So if you're on Twitter, it's tickertimenews.com. I'm just going to put Metaverse stocks. All right, so Metaverse stocks watch list. I just posted it to our Twitter account. I'll also take this link and put it in the description for the video here. I think I can do that. If I copy that link and go in to the video description, it'll show up there in a few minutes, but I'll put the link to this in the video description. It's got a couple of, or quite a few of the companies right here that I think are going to be important for the Metaverse. You know, you got Nvidia in here, Disney, Autodesk, Microsoft, Facebook, which is now Meta Platforms, Unity Software, Roblox, and Apple, Amazon, Google, Netflix, Matterport, that's a big one. And then, of course, the Metaverse ETF, which is Meta. And then there's some cryptocurrencies in here that are also building, like Uniswap. They're building in the Metaverse right now. So this is a cool little place just to keep tabs of what I'm watching for the metaverse. It even shows you when earnings are coming up for the companies on this list. It's pretty cool. It's pretty neat. But yeah, I'll share that with you guys. So that's in there. I'll put it in there right now. So that wraps up the companies that I wanted to talk about today. So just a couple of notes here to wrap up the live stream. Of course, if you've got questions, just let me know. We'll go over it right quick. Let me put that link here in the description. I'll call it the Metaverse watch list. All right. So I just put that in the description of the video, so it should show up there. You might have to refresh the page. But the Catalyst watch video, I think it's one of the most important videos that I do every week. It comes out Sunday evenings. I've been doing it as a live stream. And in that video, I talk about the companies that are set to move. And they could be moving up, they could be moving down. So those videos, I think, are important, at least when I'm creating them. A ton of research goes into that video. It's typically about a half hour long, and it is just packed full with information for the upcoming week so you can be prepared. But again, it's a ton of research that goes into it, a ton of analysis. This week, for example, we've got Lucid Group, ticker symbol LCID. They report their first earnings ever on Monday. We got Qualcomm. They're holding an investor day on Tuesday. On Wednesday, we've got Nvidia. It releases earnings. So there's a lot to talk about. So I will let you all know on Sunday evening in the Catalyst Watch video what I'm watching and why I'm watching for the week ahead. So remember to check that out. Also, remember, if you would like to join us, first link in the description takes you to our Patreon page. I would love to have you as a Patreon member. That just helps to support my research, analysis, technical breakdowns. And by becoming a Patreon member, we're also going to have our buy-sell alerts and trade setups. That'll be coming soon for Patreon members. So thank you guys so much for watching. I greatly appreciate it. I think that's all that I have to say. Let's see here. It's my go-to Sunday pre-market video. Thank you for that. I greatly appreciate that. I really try to pour my heart and soul into that Catalyst Watch video because it's the stock market. I mean, there's literally thousands of companies that we can invest in, that we can trade on, and trying to find the ones that are going to have the biggest impact. It really takes a lot of stitching things together. You know, you find a piece of information over here, another one over here, and you're just stitching them together to try to come up with a cohesive plan for it. So yeah, I believe it's one of the most important videos that I do every week. It comes out Sunday evenings, and it's called Catalyst Watch, and it's stocks set to move. So make sure to catch that. All right, guys. Well, thank you for joining me. Thank you guys for spending your Friday evening with me. I love the questions that I got today. Hopefully there were some good answers for you guys. Have a wonderful weekend, and I guess that is it. So everyone, thank you guys so very much for watching, and I will see you in the next video.